Price versus market capitalization. What's the difference and what are the key things that you need to know to make the most amount of money from the markets? Today, we're going to look at 3 different coins and I'm going to show you a few different ways you can make more money from the markets. So what is market cap? Well, the definition is the total market value of a cryptocurrency's circulating supply. It's the same as stocks. It's the total value of the free float capitalization in the stock market. What does that mean in English? Basically, it's the current price of the asset multiplied by the circulating supply. That gives you the total value of the cryptocurrency or a company. So I'm going to show you a couple of charts. Here's 2 charts. It's the same coin. Here is Bitcoin. What do you notice between the two? Similarity and differences. Well, the top one is price, Bitcoin's price, and the bottom one is market cap. And you should notice that when price goes up, market cap goes up. When price goes down, market cap goes down, right? And what that tells us is that the new issuance of new tokens into the market are so small, it doesn't impact the price, right? That's really, really important. And this is the ideal condition when the price pattern and the market cap pattern look practically identical. So now I'm going to show you another one, the second one. We're going to cover 3 today. What do you notice about these 2? Well, it's actually the same token, but one is price and one is market cap. Same time frame, right? We're talking about the exact time frame. And it's a token called reserve rights. And the reason I'm using this one is a lot of my community are asking me about reserve rights. But you want to know that the price and the market cap are significantly different. Now, that is really, really important information as an investor if you're looking to make money. Because if the market cap is going up, it means the value of the project is going up. But if the price is going down, that means you're losing money. How can that be? So let's just look at this in an objective manner. Exact dates, price has gone down, but the market cap has gone up. So we're talking about a 20% difference, the price going down, but the market cap doubles. How can that be? Well, remember the formula. Market cap is the token price times circulating supply. So if the market cap is going up, but the price is going down, that must mean there's a new issuance of tokens. And when there's this much difference, it means there's an aggressive release of new tokens. And that can really change the perception of the price action. So let's just take an example, right? If you don't know this information. If you had $10,000 worth of reserve rights token, RSR, and with the red arrow, 20% down means your 10,000 is now worth 8,000. But the project has increased in value and market capitalization by 200%. So really, it should be 20 grand. It should be 2x up, 200% up. And this is the key thing that you really want to know when you're looking at the market. So when I'm looking at reserve rights, looking at the price action, I'm saying, look, sometimes it's harder to do technical analysis because there's been a massive issuance of new tokens and it's not obvious to see. So I just did a quick analysis on the market cap of reserve rights because the markets are driven by fear and greed, and market capitalization is represented in that as well. And the market is moving 5s and 3s, and I'm seeing a really clear 5-way pattern to the upside, and we're probably going to see a correction in reserve rights. But when we're looking at price alone, it doesn't reflect this psychology because of the new issuance in tokens. Hopefully that's making sense. And by the way, if you want to learn how to read the markets and be 2 steps ahead, so you know when to buy low, sell high, what the market is really likely to do next, you want to take my masterclass. It's the 4 secrets you must know to make money trading the markets. It's free. It's in the description link below, and it will just take you to the next level. It's all about being in anticipation of the next move so you can prepare, buy, stand aside when the market is not doing what it's likely to do, but also knowing when to be taking profits when we're going to see trend reversals. So again, this is free. It's in the link. It will just take your trading and your buying and selling behavior in the markets to the next level. So I said we're going to cover 3. This is one. That's why I started really looking at market cap versus price when there's a big difference. So we're looking at liquidity, right? This is an Ethereum project. It's basically MakerDAO with 0% interest. It's a DeFi project. I love this project as a user. It's backed by Pantera Capital, one of the big VCs in the crypto space. However, look at the price versus the market cap. The price has just gone down, right? Down, down, down. And the market cap has gone up. So what does that tell us? Well, it tells us the project is becoming more and more successful. It's a very successful DeFi project. However, the issuance of new tokens, and by the way, reserve rights and liquidity both have a stable coin partnership. So they have a dual token mechanism. And that could be part of it, right? So I don't think there's deliberate manipulation going on. It's just that you need to be aware when there's an issuance of new tokens. And I remember the price, just because I remember the first 6 weeks, I read the white paper of liquidity, and the token release in the first 6 weeks on Uniswap was quite aggressive to basically reward early liquidity providers, LP tokens, and everything else. But I was like, okay, but it's a very strong project, DeFi project backed by Pantera Capital. But the price was just tanking and the market cap was just exploding, and it was quite annoying. So you want to be aware of this. But now you know the difference between price and market cap, but really paying attention to the two. The ideal scenario when you're looking to buy low, sell high, or the reverse, if you're shorting the market, sell high, buy low, is the ideal conditions is when the price and the market cap patterns look the same. That just gives you a nice indication that the issuance of new tokens is minimal, and therefore you won't see the price being diluted. Let's finish with a quote of the day from my book. It is from chapter 8. We're going to go with Mr. Henry Ford. He said the following: "It has been my observation that most people get ahead during the time that others waste." So just learning things like this is going to sharpen your axe so you can really, really take the best action possible. So make sure you check out my 4 Secrets Trading Masterclass. It's all about knowing what the markets are very likely to do and really understanding that the markets are driven by fear and greed. And the buying and selling behavior is crowd psychology. And what I teach you in the 4 Secrets is how you can, in an obvious, mechanical, consistent way, see what's very likely to occur before it occurs. And that would really direct your buying and selling behavior yourself so you can maximize your profits and making money from the markets.